trade on a chart, we're constantly looking at many different candles, each with its own range, formation speed, and volume profile. These details matter, but the reality is that most traders simply don't have the time or ability to analyze every candle in depth. As many experienced traders say, price action is king, and it's true. But price action is not easy because a candle carries far more information than what we can see at first glance. Buying pressure, selling pressure, momentum shifts, and hidden market strength. Every candle is actually sending us a message. Who's in control? It's momentum shifting. Where is real volume flowing? These are valuable clues, yet they often go unnoticed in manual chart reading. And that's exactly why OmniSpectrum Scan was created. First of all, OmniSpectrum Scan gives you access to up to 16 key extreme data points from a single candlestick within one trading cycle. Details that most traders tend to overlook with the naked eye. First, let's talk about timing. On the chart, you'll notice large dots appearing. These are signals showing you which candles are forming at the fastest speed within a given cycle. They highlight the moments when the market's energy is shifting the quickest, giving you a clearer pulse of the price action. On the other hand, the smaller dots on the chart indicate candles that form more slowly. Their momentum is weaker, and the price movement isn't as quick. These moments help you spot when the market is losing strength or moving with less urgency. When it comes to timing, this approach works best on non-time-based charts such as tick, Renko, or range. So the real question is, how do we actually apply it? Right here on the tick chart, you can clearly see that we're in an uptrend. During this phase, the green candles are forming extremely quickly, while none of the red candles show the same fast formation. This tells us that buying pressure is stronger and more decisive, giving us a solid confirmation that the uptrend is reliable and well supported. On the flip side, in an uptrend, if you start to see red candles forming at a fast pace, it's a sign that buying pressure is beginning to hesitate under the weight of incoming selling pressure. In this example, we have two green candles forming very quickly, but right after them, a red candle appears with the fastest formation time of all. In fact, it forms even faster than the two bullish candles before it. This is an early signal that sellers are gaining momentum and starting to push back against the uptrend. And once the downtrend begins, we start to see a series of red candles forming faster than the green ones. This tells us that selling pressure is becoming stronger and more aggressive, adding even more confirmation that the downtrend is firmly in control. On the other hand, when candle formation slows down, it's a clear sign that the market is entering a phase of indecision and low liquidity. Without a clear direction, price movement weakens, causing candles to form more slowly. This often happens during a sideways phase, where green and red candles appear back-to-back, each taking longer to form, a reflection of hesitation from both buyers and sellers. The second key piece of information this indicator provides is the extreme levels of a candle's body, the points that show how far the price truly moved within that candle. Each large dot that appears on the chart highlights the moment when a candle has the biggest body within that entire cycle. It signals where strong price movement truly took place. Next, each small dot shows the moment when a candle has the smallest body within the entire cycle. It highlights where price movement was the weakest or most limited. These are exactly the kinds of insights we rely on throughout the entire trading process. Let's look at a practical example on the chart. Imagine you're trading using the MA crossover strategy. During the downtrend, when price pulls back toward the MA lines and a bearish candle appears with the largest body compared to the previous candles, That's a clear signal that a selling opportunity is forming. These candles often turn into strong Maribozu or engulfing patterns, showing that sellers are taking control with conviction. Moments like these typically offer excellent setups for entering a sell position. Right at the start of the downtrend, we can see two large-bodied bearish candles forming back-to-back. This tells us that each candle is expanding more than the one before it, signaling that selling pressure is increasing sharply. Sellers are becoming more decisive, and the downward momentum is clearly strengthening. Next, when the price shifts into an uptrend and pulls back toward the MA lines, we still don't see any bullish candle with a strong enough body to justify a potential entry. Because of that, this entire phase can be skipped. It's simply a noisy part of the trend, and there's no reason to force a trade when the market isn't giving us a clear signal. Next, let's move on to the next component, the candle's volatility range, also known as the spread. This metric shows you how wide each candle moves, and more importantly, which candle has the largest spread within the entire cycle. The small dots that appear on the chart indicate candles with the smallest volatility range within the cycle. These candles often signal that the market is compressing or that it's losing the momentum needed to continue moving higher or lower. For example, in this situation, when you see candles with strong volatility ranges forming back-to-back, it reveals that the price is showing a strong intention to move either sharply up or sharply down. Candles with large spreads indicate that buyers or sellers are willing to trade at almost any price level, which reflects a much clearer market direction compared to candles with weaker volatility. For example, in this situation, when you see candles with strong volatility ranges forming back-to-back, it reveals that the price is showing a strong intention to move either sharply up or sharply down. Candles with large spreads indicate that buyers or sellers are willing to trade at almost any price level, which reflects a much clearer market direction compared to candles with weaker volatility. Next, we move on to the next component, total volume. When large dots appear on the chart, they indicate that the candle at that moment holds the highest total volume within the entire period. On the other hand, when small dots appear, that they show that the market is forming candles with the lowest trading volume within the period. So, how do we actually apply all of this information on the chart? Here, we have an uptrend line forming, and then the price breaks below it. At the moment of the breakout, we can clearly see a series of bearish candles carrying the highest trading volume in the entire cycle. This tells us that the breakout isn't happening on weak momentum. It's supported by strong volume, making it far more reliable. That's why this becomes a confident and valid point to enter a sell position. On the other hand, at this point, we can see that price breaks above the trend line, but the trading volume is extremely low. In fact, it's the lowest in the entire cycle. This tells us there's no real strength behind the move, and without momentum, the breakout quickly fails. This is a classic false breakout, and thanks to the weak volume signal, we were able to avoid getting trapped in it. The next component is the buying volume of a candle. When large blue dots appear on the chart, they signal that the current candle holds the highest buying volume within the entire cycle. Conversely, when small green dots appear, they indicate that the market is currently forming candles with the lowest buying volume in the entire cycle. Since volume analysis is something we encounter frequently in trading, we'll move through this section quickly and skip the example for now. The next component is the total selling volume. When large dots appear, they indicate that the current candle holds the highest sell volume within the entire cycle. Conversely, when small red dots appear on the chart, they indicate that the market is producing candles with the weakest selling pressure in the entire period. Next, at line number 7, we're given information about the extreme levels of delta volume. When large blue dots appear, it means the positive delta volume of the current candle has reached its highest level within the entire cycle. Conversely, when these blue dots appear small, it signals that the positive delta volume of the current candle is at its lowest level within the entire cycle. And finally, we come to the extreme level of negative delta volume. When large pink dots appear on the chart, they indicate that the current candle holds the highest negative delta volume compared to all the previous candles in the cycle. Conversely, when the pink dots appear small, it indicates that the negative delta volume of the current candle is at its lowest level within the entire cycle. And that completes the overview of the OmniSpectrum Scan interface. Throughout this explanation, you've heard many times that the indicator calculates extreme values based on a specific cycle. So the next question is, where do we define that period? Here, the period is set to 10. This means the indicator continuously scans the previous 10 candles relative to the current candle to determine whether the candle forming right now is creating any extreme values. Specifically, within the latest 10 candles, the indicator checks whether the current candle is the fastest or slowest candle in terms of formation speed, the candle with the max or min body, the candle with the max or min spread, the candle with the max or min total volume, the candle with the max or min by volume, the candle with the max or min sell volume. For positive delta, the way extremes are calculated works a little differently. When the indicator checks whether the current candle has the highest or lowest positive delta within a cycle, it does not compare it with the 10 adjacent candles. Instead, it compares the current candle with the last 10 candles that actually have positive delta. This means the indicator filters out the most recent 10 candles with positive delta, then determines whether the current candle has the strongest or weakest positive delta within that group. This method makes positive delta analysis far more accurate because positive delta only carries meaningful context when compared to other candles with positive delta, not to candles with zero or opposite delta. For negative delta, the process for detecting extremes works in a more refined way to reflect the true strength of active selling pressure. Instead of comparing the current candle with the last 10 adjacent candles, the indicator takes a more selective approach. It pulls out the last 10 candles that actually contain negative delta, meaning only the candles where sellers were aggressively hitting the bid are considered relevant for comparison. This gives you a far clearer picture of real selling intent. If the current candle shows a stronger negative delta than any of the previous 10 negative delta candles, selling pressure is intensifying. If its negative delta is weaker than all 10, sellers are losing conviction and momentum is fading. By filtering out irrelevant candles, the indicator ensures that your delta analysis stays clean, meaningful, and highly actionable. Before we dive into the most exciting part, we'd like to take just 30 seconds to share an exclusive promotion for today's webinar. Right now, OmniSpectrum Scan is available at a massive discount, from 6 sessions down to 2 $2 as shown on the screen. This is the lowest price we've ever offered to our trading community. And don't forget, next we move on to the most exciting part, how the indicator actually generates its signals. This is the section many traders look forward. First, the most essential component you'll notice on the screen is the control panel. This is the central hub where you customize exactly how the indicator displays its data, decide which extreme metrics you want to monitor, and refine the chart interface to match your trading style. How to open the control panel. Opening it is extremely simple. Move your mouse to the top left area of the chart where the indicator's name appears. You'll see a toggle icon next to the indicator name. Just click once and the full control panel will slide open, showing all available options. Understanding the control panel layout. Once opened, the control panel displays several rows of settings. The very top row allows you to enable or disable the different types of information the indicator provides. Practical example. Let's say that at this moment, you only want to focus on three major components: candle formation speed, candle body size, spread range. To do that, you simply open the control panel. Enable speed, bar body, bar spread. Disable all the others. As soon as you do this, the chart will instantly hide every unnecessary plot and keep only the metrics you want to analyze. And here's a small but very important reminder when using the OmniSpectrum Scan indicator. To ensure that the indicator operates accurately, especially for anything related to volume and delta, you should enable tick replay. Next, let's move on to the signal bar condition section. This is where you define the actual trading signals used by the indicator. In simple terms, this is the decision-making engine that determines when the indicator should trigger a buy or a sell signal. When you open this section, you'll immediately see two main configuration sets. Bullish, used to define the conditions for buy signals. Bearish, used to define the conditions for sell signals. In the signal bar condition section, you're free to toggle each condition on or off to decide exactly how buy or sell signals are generated. Now we'll define the conditions for the buy set inside the signal bar condition panel. This is where we tell the indicator exactly when a buy signal should be generated. Step 1. Identify the candle direction. First, we specify that a buy signal must only be triggered on an up candle. This ensures that the signal always aligns with bullish price action. A buy should only appear when the market is actually showing upward strength. Step 2. Enable the required extreme conditions. After selecting the candle direction, we turn on the core conditions necessary for a strong buy signal. Body max, the candle has the largest bid body. Spread max, the widest price spread. Volume max, the highest total trading volume. Buy volume max, the strongest buying volume. What this combination means, with all of these conditions activated, the indicator will only generate a buy signal when the market prints an exceptionally strong bullish candle, one that shows a powerful bullish body, a wide and decisive price movement, heavy participation from traders, clear aggressive buying pressure. In other words, a buy signal will only appear when the candle represents a high-quality, high-conviction bullish push, giving you a much better probability of entering into a strong move. Conversely, to detect a sell signal candle, we configure the opposite conditions under the bearish set of the signal bar condition panel. Step 1. Identify a bearish candle. First, we specify that a sell signal can only be triggered on a down candle. This ensures the signal aligns with genuine bearish pressure, meaning sellers are in control and actively pushing the price lower. Step 2. Enable the extreme conditions for bearish strength. Once the candle direction is set, we activate the bearish extreme metrics. Body max, the largest bearish candle body. Spread max, the widest bearish spread. Volume max, the highest total volume. Sell volume max, the strongest selling volume. What this combination represents, by activating all these conditions, the indicator will only highlight sell signals when the market prints a very powerful bearish candle, one that shows a strong bearish body, a decisive downward range, High trading participation. Dominant, aggressive selling. In other words, a sell signal will only appear when there is a clear, high conviction bearish move, giving you a strong and reliable entry point. So now, based on the conditions we've defined for both the buy and sell sets, the indicator is officially ready to generate signals directly on your chart. From this point on, every buy and sell signal you see comes strictly from the rules you created. Let's take a closer look at how these pure OmniSpectrum Scan signals appear on a 5-minute YM chart. We'll observe how the indicator marks each signal, how it responds to market movement, and how clearly the buy and sell opportunities stand out using your customized logic. This is where you'll truly see the power of the system in action, not in theory, but visually, right on your chart. Next, let's explore how OmniSpectrum Scan performs when combined with another indicator, supply-demand discovery. But instead of using all the signals from both tools, we'll strategically combine them in a cleaner and more effective way. For this setup, we will turn off all buy-sell signals from supply-demand discovery. Instead, we'll only use the supply and demand zones it generates. These zones act as potential reaction areas where the market often. Meanwhile, all trade entries will rely exclusively on signals generated by OmniSpectrum Scan, which we've configured using extreme values. In this combination setup, we want the indicator to generate more frequent signals. So we'll reduce the number of conditions required for each trade signal. The goal here is to maintain signal quality while making sure the conditions aren't overly restrictive. Buy signal setup. A buy signal will now appear whenever an up candle meets these two key conditions. Body max, the largest bullish candle body in the cycle. Buy volume max, the highest buying volume in the cycle. With just these two core requirements, we ensure that the candle represents strong bullish momentum. Buyers are clearly dominating through aggressive volume. The signal remains reliable, yet not too rare or overly filtered. This creates a more responsive and practical buy signal, especially when used alongside supply-demand zones. Similarly, the sell signal will be triggered when a down candle satisfies. Body max, the largest bearish candle body in the cycle. Sell volume max, the strongest selling volume. This ensures that sellers are pushing the market decisively. The down candle carries real bearish strength. Signals remain meaningful but appear more consistently. By keeping only the strongest conditions for both buy and sell, we strike the perfect balance between frequency and reliability, making the system far more effective when paired with supply-demand discovery zones. Now let's move into the trading demo. In this example, the moment price touches the supply zone, an immediate sell signal candle appears from OmniSpectrum Scan. This candle shows the largest body in the entire cycle, signaling that sellers are stepping in aggressively right at the supply area. The combination of a valid supply zone and a strong bearish signal gives us a very clear confirmation that selling pressure is taking control. With that confirmation, taking a sell entry here becomes a confident and logical choice. Similarly, in this next example, we spot a strong bearish candle breaking through the demand zone. At the exact moment of this breakout, an OmniSpectrum Scan sell signal is triggered, confirming that the move is powerful, decisive, and supported by solid volume. This tells us that sellers aren't just breaking the demand zone, they're pushing the market down with real strength. If you missed the previous sell entry, this breakout provides a perfect opportunity to re-enter a sell position. Likewise, in another scenario where price breaks strongly above a supply zone, we immediately receive a buy signal from OmniSpectrum Scan right at the breakout moment. This indicates that buyers are stepping in with real strength, enough to push through a supply area where sellers normally dominate. When a buy signal aligns perfectly with a clean breakout like this, it provides strong confirmation that bullish momentum is taking over. This becomes a high-quality buy opportunity, ideal for catching the start of a new upward move. In another scenario, after a demand zone is formed, we notice a buy signal candle triggered by OmniSpectrum Scan. This indicates that buying pressure is strengthening right at the demand area. The signal candle meets both buy volume max and body max, showing strong participation from buyers and a confident bullish push. This alignment reinforces the validity of the demand zone and provides a solid buy opportunity to enter the market. However, here's an important reminder. If the OmniSpectrum Scan signal appears too far away from the moment the supply/demand zone is formed, meaning it no longer lies within the zone's reaction area, then it's best not to take the trade. The signal loses its confluence with structure and the reliability decreases. Likewise, in this scenario, as price touches the supply zone, a sell signal from OmniSpectrum Scan appears immediately. This shows that sellers are stepping in right as price enters the supply area, creating a strong bearish signal. And as you can see, with this combination, we have multiple entry opportunities without ever being passive. The supply/demand zones highlight key price areas, while OmniSpectrum Scan gives us precise confirmation for execution. This keeps us proactive and ready to capitalize on strong market reactions. Before we move on to the next section, let's take a moment to review a few real trade examples using the combination of OmniSpectrum Scan and supply-demand discovery. These examples will give you a clearer picture of how the two indicators work together, how signals are triggered, and how we can use them to execute high-quality trades. Next, we'll address a question many traders have been asking. Can OmniSpectrum Scan be combined with Captain Optimus Strong? And if so, how do we integrate them effectively? First, we add Captain Optimus Strong to the chart. Then, open the input settings and select OmniSpectrum Scan from the available options. This is the most crucial step because it determines whether the two tools can connect and operate in sync. If Captain Optimus Strong receives the correct input data from OmniSpectrum Scan, it can then read the signals, process them, and execute trades automatically based on Omni's conditions. Setting up this connection properly ensures that the two tools work together smoothly, creating a much more powerful and efficient trading system. First, let's take a closer look. Here we can see that for a buy signal to be generated, the conditions we've defined in OmniSpectrum Scan are: the candle must be a bullish up candle. It has the largest body within the cycle. It has the widest spread. It carries the highest total volume. It has the strongest buy volume. And inside the OmniSpectrum Scan setup within Captain Optimus Strong, we also enable all four key conditions. The candle must have the largest body in the cycle. The candle must have the widest spread. The candle must carry the highest total volume. The candle must have the strongest buy volume. And of course, the candle must be a bullish up candle. Likewise, let's look closely at the conditions required for a sell signal in OmniSpectrum Scan. A sell signal will only be triggered when the following factors are present. The candle must be a bearish down candle. It has the largest body in the cycle. It has the widest spread. It carries the highest total volume. It has the strongest sell volume. Next, inside the OmniSpectrum Scan setup within Captain Optimus Strong, we enable the same four conditions. Body max, largest bearish candle body. Spread max, widest bearish spread. Volume max, highest trading volume. Volume sell max. And of course, the candle must be a bearish candle. And here's a very important note. You must select the correct signal code for OmniSpectrum Scan inside Captain Optimus Strong. Choosing the proper encoded signal ensures that Captain can accurately detect the buy-sell signals generated by OmniSpectrum Scan. If the wrong signal is selected, Captain may miss the signal or execute trades at the wrong time. So make sure that Captain Optimus Strong is linked to the correct encoded signal from OmniSpectrum Scan, allowing the entire system to operate smoothly and precisely. With this setup, we've successfully turned OmniSpectrum Scan into a fully automated trading system by pairing it with Captain Optimus Strong. We've already performed live, real-time trading using the OmniSpectrum Scan plus Captain Optimus Strong combination, and the entire session has been uploaded to YouTube. You can visit the ninjatrader YouTube channel to watch the video and see exactly how these two tools work together in real trading conditions. And finally, to truly understand the performance of the indicator, let's take a look at the backtests we conducted on both NASDAQ and Dow Jones. These backtest results will give you a clearer picture of how OmniSpectrum Scan performs across different market conditions. First, we use the HelloWin backtesting software to run our tests. This platform allows us to simulate trades accurately and visually, giving us a clear understanding of how OmniSpectrum Scan performs across different market environments. The final day of our backtest is set to November 12th, 2025. For the NQ NASDAQ market, we performed a continuous 100-day backtest, allowing us to evaluate the system's stability and consistency over a sufficiently long period. We also use the UTC-05 time zone, which aligns with the standard trading hours for the majority of traders in the United States. This ensures that all market behavior and session timing reflect real-world trading conditions accurately. And here are the backtesting conditions we applied for the buy setup. And here are the backtesting conditions we applied for the cell setup. And here are the backtest results on NQ. The P&L curve rises steadily with a clean and consistent structure. Total profit reached $60,000, while max drawdown remained at just $11,900. This means the system produced 5 times more profit than its maximum risk, which is an exceptionally strong performance. Additionally, the win rate stayed above 50% throughout the entire testing period, an impressive figure when combined with a smooth equity curve and low drawdown. Notably, the longest winning streak was greater than the total number of losing trades. Similarly, here is the backtest for YM, Dow Jones, and we'll walk through this process together. We will run a quick 30-day backtest on YM. All backtests include full commission costs, ensuring the results accurately reflect real trading conditions. Both markets are tested on a 5-minute chart, providing consistency and allowing for a fair comparison between NQ and YM. And the P&L curve on YM is just as impressive as NQ. The results show that even though the win rate is slightly lower than NQ, the profit to drawdown ratio is significantly higher, reaching 8 times the max drawdown. Most notably, the profit factor of 2.24 is an outstanding number, indicating that the system generates more than twice the profit relative to its potential losses. This demonstrates that OmniSpectrum Scan performs strongly not only on NASDAQ, but also on Dow Jones, even with different market characteristics. And with that, we've walked through everything together, every detail, every mechanic, and every practical way to use OmniSpectrum Scan to its fullest potential. We truly hope you enjoy this indicator and find real value in the capabilities it brings. Before we reveal today's free gift, we have a special promotion exclusively for the indicators and systems featured in this webinar. This is a great opportunity to enhance your trading toolkit. We truly appreciate you spending your time with us in today's webinar. As a small gesture of gratitude for your support and presence, we want to offer you the most generous discounts we've ever provided. Prices you won't find on our website or anywhere else. OmniSpectrum Scan from $696 down to only $278. This is the lowest price we've ever released. If you feel that OmniSpectrum Scan can support your trading journey and bring real value to your workflow, this is a wonderful opportunity to make it yours. OmniSpectrum Scan plus supply demand discovery, $396 follows. This combination has helped many traders trade with more confidence by pairing strong supply-demand zones with precise extreme value signals from OmniSpectrum Scan. We want to make this combo as accessible as possible for everyone attending today. Captain Optimus Strong plus OmniSpectrum Scans from 76. If you love automation and want your system to execute OmniSpectrum Scan signals with precision, this combo is designed for you. We've pushed the price down as much as we can so more traders can benefit from this powerful duo. Once again, thank you sincerely for joining us today. We hope these offers serve as a meaningful gift to you and that they help you move one step closer toward a more confident and structured trading experience. And the special gift we prepared for you today is the X-Day Rolling Pivot Indicator. This indicator is built specifically for intraday charts and does not plot higher time frame pivots. It follows the rolling pivot method from Mark B. Fisher's book, The Logical Trader, but improves on it by letting you choose how many days to include, 3, 5, 7, 10, etc. Pivot levels are calculated using the highest high, lowest low, and close of the selected period. S1 and R1 act as Fisher's rolling pivot low and high, and the zone between them is shaded yellow to mark a choppy, no bias area where trading is discouraged. You should trade only when a price breaks out of this zone. Above R1, bullish phase, look for longs. Below S1, bearish phase, look for shorts. We also added S2, R2, S3, R3, S4, R4 as customizable extensions from the PP line to give clearer target levels. Finally, the indicator includes a minimum differential percentage setting to normalize pivot spacing, helping SR levels remain stable and reliable from day to day. And with that, our webinar has come to an end. To receive your free gift, the X-Day Rolling Pivot Indicator, simply reply XDay to support@ninza.co. On our team will send it to you right away. Once again, we truly appreciate you spending your time with us and joining ninza.co today. If you have any feedback, suggestions, or ideas you'd like to share, please feel free to email us or leave a comment. Your input means a lot to us and helps us continue improving our products and services. Thank you so much, and we wish you good health, successful trading, and a positive mindset on your trading journey. We look forward to seeing you again in our future webinars.